Very good morning, friends. I'm Nalnakshi Swami, welcoming to my channel, Smart Index Edge. I'm on the hourly chart of Nifty. So, if you see, this is the previous day border, previous day level. Let me change the color. What the market has done is, it has gone above the previous day high and came down below the previous low and closed, that is previous day low is 25,523 and it has closed below the previous day low 25,570. If you see this pattern on daily, it is an bearish engulfing candle. So when the bearish engulfing candle is presented over here, price action has to confirm failure and moving above this level. Suppose today, if the market opens high, if it starts trading inside this is the yesterday's low and high. Yesterday low is 25,473. Let me enable the magnet over here and take the price node so that all of you should do this actually. 25,473 and if I place the cursor, that is 25,669. These are the two boundaries for the today's trade. Suppose in this structure on an hourly, you can see market retested 1015 level. This was the level 1015 high. And then it retested the same level. If I place the cursor 25,600 and also little bit short 25,599.3, that is equal low. Since this is an equal high, and also if you noticed in this area, this is a fair value gap. Fair value gap, static liquidity, both have combined. There is liquidity for the sellers. Suppose if the sellers, if they want to sell at high price, the market will try to move higher. Today, if it opens within this range and moves higher, it can seek liquidity. Suppose if it takes liquidity over here and if it starts trading below this yesterday's low, then it can test this level of 25,346. Pattern may be like that. In case if it doesn't seek this liquidity, if it wants to seek the liquidity later, it can directly come down and move down to this lower level and then it can move up. So this may be the pattern for this and it is a bearish engulfing. When there is a bearish engulfing presentation on the chart, you need to, as price action trader, you need to know for the confirmation of bearish angle. This may be a false presentation. Sometimes what happens is market will move higher after presenting this. Because if I go there to the left side, the trend has started. This is the break of the structure and trend has moved here. And within this trend structure, this is the correction within this structure. The presentation may be bearish engulfing candle presentation, but the candle presentation within the trend structure, it becomes invalidated sometimes. So we tend to read the candlestick pattern in a wrong way. That can also happen in the market. So we need to see, but the way it has taken liquidity over here, sometimes what the market will go after taking the liquidity, it can even form equal high. Even it can go up to 25,663, confusing the people that it is why? Because it has taken liquidity, it will go to mitigate that thing. Mitigation can also happen in the market. So, based on the India VIX, the India VIX is 12.79 is the reading. I am getting the calculation and the levels to be 25,687 and daily low to be 25,346. These are the immediate boundaries for the market, which is within the range of 320 points. That is more than enough for the market to trade. So it is the week's beginning yesterday, Monday. If the trend, they can do within, they can close within the range Wednesday, or it may be a trendy move downwards, going up, and anything can happen in the market within the range. Suppose if it is within the range of yesterday's range, it is 188 to 200 points. If I move this, it is, it is 194 points range. 194 to 197 points range. So mark down the levels, and the weekly boundaries are 25,063 and weekly high to be 25,970. These are the levels you need to mark out. And yesterday pre-market level is at around 25,661. I do mark pre-market level when the market settles down around 9-8 a.m. just to have a guidelines. So if I see this from the pre-market level, the big players have taken control and the price has started moving inside. So these are the big players line. This is the magic line where the big players, big institution will watch. If they have sold there, they will be alerted over here if they are sellers. Coming to the Bank Nifty is also done the same thing. But this is 30th and it has not engulfed anything. It has not come down below the previous day low. You can imagine it is within the range of previous day. This is the previous day low and this is previous day high. Nothing has changed. No structural breakdown has happened in the market. It is just came down and it is breakout of the structure and it has come inside the previous day low. So there is no violation of the previous day boundary. The price action is within this, and we need to see what sort of price action we can see in the market. So first support to note down is 56,929 and 57,696 on the upper side. And the extreme resistance, second resistance 58,330 and second support is 56,295. So it is a deep down correction. We can say some type of range formation is happening. It is the preparation for the range formation in the Bank Nifty because it undergoes through range by range movement. You can see if you go back there, it comes down and forms a range for 1, 2, 3 days. And then it is same pattern you can see over in the Bank Nifty. So it may may go sideways like this before any up move or down move. Okay, friends, I wish you all happy and profitable trading day. Trade wisely because if it is an inside day formation on the Nifty, suppose, then you need to watch carefully. Thank you very much. Nalakshi Swami signing.